Welcome. I'm Jayden Doyé, CPA. Today we're talking about health savings accounts, or HAS, for many professionals, especially law firm owners. An HSA is one of the most powerful and underused tax strategies available. It allows you to save for healthcare expenses while reducing your tax bill at the same time. In this quick guide, I'll walk you through what HSAs are, what changed for 2025, and how to use them strategically. Let's start with the basics. An HSA is a tax-advantaged savings account designed to help pay for qualified medical expenses. What makes HSAs unique is what we call the triple tax advantage. First, your contributions reduce your taxable income. Second, the money in the account grows tax-free. And third, withdrawals for qualified medical expenses are also tax-free. Very few accounts offer all three benefits. That's why HSAs can be such a powerful planning tool. For 2025, the contribution limits have increased slightly. You can contribute up to $4,300 for individual coverage or $8,550 for family coverage. If you're age 55 or older, you can contribute an additional $1,000 catch-up contribution. One important note, once you enroll in Medicare, you can no longer contribute to an HSA, so planning the timing of your contributions becomes important. Not everyone qualifies for an HSA, so let's review the requirements. First, you must be enrolled in a high-deductible health plan, often called an HDHP. Second, you cannot have other general health coverage. Third, you must not be enrolled in Medicare. And fourth, you cannot be claimed as someone else's tax dependent. If you meet these four requirements, you're eligible to open and contribute to an HSA. HSA funds can be used for a wide range of medical expenses. This includes things like doctor visits, prescriptions, dental care, and vision services. You can also use it for over-the-counter medications and certain long-term care insurance premiums. If you're on COBRA, those premiums can qualify as well. And once you turn 65, your HSA can even be used to pay Medicare premiums. That flexibility makes HSAs extremely useful over time. Many people confuse HSAs with flexible spending accounts or FSAs, but there are some important differences. With an FSA, unused funds are typically lost at the end of the year. With an HSA, your money rolls over indefinitely. You also own the account, even if you change jobs or insurance providers, and in many cases, you can invest your HSA funds, allowing them to grow over time. That's why many professionals treat their HSA as both a health fund and a long-term investment tool. To get the most value from your HSA, consider a few smart strategies. First, set up automatic monthly contributions so you stay consistent. Second, if your provider allows it, invest a portion of your balance for long-term growth. Third, keep all medical receipts. Even if you pay out of pocket today, you can reimburse yourself tax-free later. And finally, avoid using HSA funds for non-qualified expenses before age 65 because that can trigger taxes and penalties. An HSA can also play an important role in retirement planning. Once you reach age 65, you can withdraw funds from your HSA for any purpose without a penalty. If the withdrawal is for medical expenses, it remains completely tax-free. If it's for non-medical expenses, you simply pay ordinary income tax, similar to a traditional retirement account. Because healthcare costs often rise in retirement, an HSA can serve as a valuable tax-free safety net. Proper documentation is important when using an HSA. Always save your medical receipts and records. When filing your taxes, You'll also need to include IRS Form 8889, which reports your HSA contributions and withdrawals. And remember, using HSA funds for non-qualified expenses before age 65 will trigger a 20% penalty in addition to income tax, so keeping good records is essential. Here are a few simple action steps to consider. First, confirm your eligibility for an HSA. Second, aim to maximize your annual contributions whenever possible. Third, save and organize your medical receipts. Fourth, explore whether your HSA provider offers investment options. And finally, download our HSA action worksheet to help plan your strategy. Small steps today can lead to significant tax-free savings over time. If you'd like help optimizing your tax strategy or selecting the right HSA provider, we're here to help. You can schedule a one-on-one consultation with our team. We'll review your current tax situation and help you structure your HSA strategy for maximum tax efficiency. Use the link below to book your consultation. We look forward to working with you.